Good morning, ladies and gentlemen. It's going to be a rough day today. Trump, tariffs and triple witching is what faces the Wall Street on this Thursday morning, which is also the last trading session for July, as also the monthly F&O expiry. I am your host, Shailendra Bhatnagar, and we will be navigating the markets with a lot of care, with a lot of guests and a lot of data for you. Firstly, let me start with the gift Nifty. This is the futures market for the index. It tells you where the Nifty is likely to open. At the moment, we have a 167 point dip on the gift Nifty, which is roughly the lowest that the index will see from 13th of June. Now, why is that? That is because you see the man responsible on the screen, the one in the blue suit. US President Trump has imposed 25% tariffs on India plus additional penalties which are still unknown because the trade deal is yet to be signed between India and US. Apart from that, you have the F&O expiry, which is going to have a negative impact on the market. Remember, for the month of July, the Nifty has already lost 4.1%. That's about 700, 800 points in trade. US President Trump yesterday 6 p.m. said that there doesn't seem to be a movement that is happening between India and US as per US requirements on opening up specific Indian sectors, and that's the reason why he is imposing these tariffs which come into effect from 1st of August. Now, let us see the data that is right there in front of us. Two major components, which is the Indian IT services exports, about $200 billion to the US each year, and Indian pharma exports, which is roughly about $10 billion each year, are exempt for the moment. What is hit is $95 billion worth of merchandise exports, primarily in the auto space, auto ancillary space, especially in gems and jewelry, shrimp exports, and of course leather and textiles. So, these are the kind of sectors that will be impacted, and this is the knee jerk that you will see in the Indian market, which most likely will have a gap down of about 2.5 percentage points. Now, that gap down will also result in an intermediate low on the market, which could be somewhere around 24,000 points, 24,200. Much will depend upon how that recovery happens from that point of time. Now, will India be hit? Yes. The US accounts for about 18% of Indian merchandise exports. So, the $90 billion that we export each year to the US will now face an additional tariff of 25%. It means two things. Either those exports, which are very necessary for the US customer, will have a higher input price, or Indian exporters will now swallow that 25% tariff or 10% or 15% depending upon how you negotiate with your customer in the US, and therefore will face lower margins. Be that as it may, we are looking for a knee jerk. Already two sectors for now are saved, which is the Indian IT sector, accounting for about $205 billion worth of software exports each year to the US, which is about 65% of the Indian software industry, and of course Indian pharma exports to the tune of $10 billion, which is about 33% of we export about $30 billion worth of pharma, of which $10 billion goes to the US. So, about 33% there is also so far going to be hit. Now, this is the broader structure in which the market will move. Now, what are the additional things that are happening which might hit sentiment on the Wall Street? First and foremost, look at crude oil prices. They are up to $73 a barrel, and that is hurting sentiment, up for the fourth day in a row. So this, along with triple witching, which is of course the F&O expiry, plus fresh tariffs, plus Trump woes, are going to hit sentiment on Dalal Street. Terrible first quarter earnings haven't improved sentiment at all. You have FII net sales now to the tune of about 38,000 crore rupees in the month of July. And more importantly, ladies and gentlemen, the rupee. I'll request the PCR to kindly show the chart of the rupee. It will hit a fresh high, low today versus the dollar. The last we saw was a low that we saw in February of 2025. That low is most likely to be breached. The chart of the rupee will just come right there in front of you. So these are the broad things that will impact trade today on a macro level. This is the chart of the rupee. What you see is the previous peak, somewhere like 87.5. That is most likely to be breached because the dollar will, because exports will be hit, therefore rupee will weaken further. So that's the structure. And to discuss this and a lot more, we'll be joined by two sets of people. Karishma Sudani, who tracks the sector, the broader economy at Business Today Television, joins us early morning. Karishma, it's been a busy evening yesterday and it looks to be a difficult morning today. It's raining cats and dogs in Delhi. How is it likely to impact the Commerce Ministry's reaction? What do you think that the Finance Ministry and the Commerce Ministry will do today?
I think what today is going to be a host of discussions that both the ministries, in fact, they've already been in discussion since the yesterday, Shell. In fact, I've been picking up from my sources that government was prepared for this moment to come. It's been around a week since when they've been recalibrating their strategies and moves that in case the tariff stamp of 20 to 25% comes, then what is going to be their first move? And their first move is that they are trying to impact the short-term challenge that this could bring in. But I'm sure what the government was not expecting was the trilogy of announcements that has come in. Not just the 25% tariff, but also a penalty that comes in on our trade with Russia for military equipments and oil. And besides that, also the sanctions on Indian firms who are tied to Iran. I really do not want to forget the candid public flirtation banter that Trump did yesterday evening on supporting Pakistan and saying that India would may in the future buy oil if this deal passes through. All of this, I think, dramatic elements, they clearly hint that Donald Trump is putting their out in open that you pick a side, and if you don't pick a side, then I keep making it difficult for you.
Right. I'm sure you're going to have a very, very busy day, Karishma. All the good luck to you. And please keep on updating us on the latest that's happening on the North Block. But for the moment, ladies and gentlemen, we start Thursday on the back foot as far as Dalal Street is concerned. And this is as good a time as any to welcome Mr. Anurag Singh, Managing Partner at Ansid Capital. He's joining us from the US. A very warm welcome to you, Anurag, and thank you so much for being awake at this hour in New York. As always, it's a pleasure speaking to you. One, the US Fed holds rates steady. That angers Mr. Trump. And then you have this tariff war which is now accelerating with India. How do you read this macro push that Trump has against your home country?
Yeah. I like Shailji. First of all, good morning. And I like when you say your home country, right? And for a moment I was in a bind. I realized then, oh, you're talking about India. Yes. Yes. So, okay, Shailji, so I think I was listening to what Karishma had to say. I think it's, and she pretty much said that India has been preparing for it, right? So I would say it's a conscious choice India has made. It seems like the tariffs have really hit us, at a unexpected time. But I think when there were deadlines and they were repeatedly pushed aside, and there were multiple meetings, at least 4 rounds of meetings, I think pretty much there would not have been much areas of agreement. And I think India would be expecting that. At least the officials under discussion would be expecting that this kind of a thing can happen. In any case, we've seen the deals that US has done with other major 10 countries, right? Which are about 10 countries where US has a, significant trade relationship. India is kind of 10th, 11th in that if we rank by the order of dollars. Pretty much everybody else has done a deal. But we're talking in the sense that everybody has done a deal, but what is the deal about? Ultimately, they are buying more Boeing planes, more defense equipment from US, and then they are getting away with a 15% if they are lucky, or 20% tariffs. So I mean, that's where things are. And so in that sense, if India is getting 25, well, India didn't also open anything for US. So for an extra 5%, if that is the choice India wants to take, I think it's a very conscious call. And, it's up to the government. Right or wrong is a very debatable issue. We can take both sides of the argument, whether, that call is right or wrong. But it seems to be a conscious choice by the government of India. As of now, it appears to me. And it was pretty imminent. Writing was on the wall that, in fact, there is not going to be any deal between India and US.
Okay. One additional point I'd like to ask you, Anurag ji, is this ongoing, very public battle that's happening between the White House and the US Federal Reserve. The Fed held rates steady, said nothing is going to happen in September as well. And at this point of the time, it's watching local prices in the US because of this tariff issue. Now, what is Wall Street's understanding of this battle? Do you think Trump will force out Mr. Powell, or do you think Powell will remain on the seat and keep on doing what he thinks is best for US interest rates and for the broader economy? What's your gut feel?
So, look, for Trump has been, I think, spending 4 years between 2016, 2017 to 2020. He's now much wiser. He has much better pool of advisors. And the consensus right now, and he understands pretty much this fact that he cannot and should not fire Chair Powell. Even if he does, that is one battle he might lose in the Supreme Court. So he knows it, and I think he's not going to go there. It has. I've been pretty clear about it, but I think now there's a larger consensus in US that he will not do that. What he might potentially do is he might nominate a fresh candidate, and there are 2, 3 names doing the rounds a little early in the name of a shadow Fed president, right? Shadow Fed chair. And what that will do is, if the person is on the board for, just 6 months before Chair Powell, steps down, his tenure comes to an end, I think it'll kind of undermine Chair Powell's authority. Now, that's, as far as the fight is concerned. Now, I think some of the questions raised by President Trump are now fair. Look, I think as of now, if you ask the street, there is a larger view that the Chair Powell is still now behind the curve. So he was behind the curve in 2021 when he delayed the decision. I can argue that it was also a political decision then because Chair Powell was looking for a confirmation in November and he kept repeating transitory for 6 months till he got confirmed and then he said, inflation is too high, it's out of hand, so we should. And now I think he's playing overcautious. Look, Fed can sit on the rates for all they like, but then they're hurting the economy. He could have started lowering the rates, and I mean, we can now debate on both sides of the aisle on this, Shalji. So that's where we are. But in any case, the fact that he said September will not be. I mean, he said that we have not made up our mind, which is a standard line. They've been saying this all along. Every meeting is a live meeting. But also look at the projections of Federal Reserve. It has been haywire. They've never met their projections. on the dot plot I'm saying. So, I mean, there is a good debate here now on this issue. Yeah.
Okay. As they say, Anurag ji, may you live in interesting times, and these times are really, really quite interesting for equity strategists such as you, journalists such as ours, and of course, all political commentators. Another tweet comes on behalf of President Trump, and this time he says that he's concluded a deal with Pakistan, and they've also decided to foray into hunting for oil. Who knows, one day this is the oil
Okay.
that India might buy from the US. So these are all needlings, ladies and gentlemen. Because I've been tracking markets and the broader economy for the last 3 decades, let me tell you 3 instances. Whenever India has been hit by sanctions and pushed to the wall, 3 major things have happened. 3 major Indian programs, which is the space program, the nuclear program, and of course the missile program, were hit with the debilitating sanctions over the last 25 years, 30 years by the US, by the EU, by every single Western country. Yesterday evening, when Trump announced tariffs, there was a joint Indo-US satellite which was pushed into orbit by ISRO, the Indian Space Organization, on a rocket with a cryogenic engine, which the US did not allow Russia to sell in the 1990s because ISRO might get ahead of the game. That has happened. The Indian missile program is one of the best in the world. You saw its impact in the month of May versus Pakistan, and of course the nuclear program is now a full-fledged triad. So be that as it may, only time will tell if US President Trump has hit a nail on the coffin of the US economy. Only time will tell, but these are things that have been worked upon, and when India is hit with sanctions, remember, the best comes out of the country. Mr. Singh, before we let you go, I'd just like you to comment on Wall Street. Nasdaq at a record high. Microsoft is now a $4 trillion company, and a strong set of earnings also coming in from Facebook.
Correct, correct. So, Shalji, by the way, let this not be a message that it will hit India in any way. It is
Yes.
not. It's a small number. Overall exports India to US is 85 billion, which is about
Yes.
2% of the economy.
Correct.
It's not a big deal. And by the way, when everybody is getting 20%, you can, so market will absorb this and move on. At the same time, let me also quote that there was a 1991 moment. There also India was forced, but India came out better by liberalizing the economy rather than conserving. Right. So there are all sides, and but India is too big a country to be rattled by these things. Right. So that's it's just an event which will eventually pass. In terms of market, US market strategy is doing very well. It is phenomenal. Why? Because employment rate is strong. Economy, GDP grew by 3% again this quarter. There seems to be no dearth of in terms of opportunities. One good thing that has happened with the arrival of Trump administration is that it is trying to deregulate the financial sector and the other sectors, right? So the deregulation also creates its own jobs and opportunities. So business wise, you have to give it to the Trump administration that they are very pro business, and that is kind of bringing out the kind of the animal spirits back, which were during the Biden administration, it was a bit throttled, right? So that there is ample confidence, and everything is kind of looking very bright, after a couple of decades. So market is just reflecting that, but earnings this year, I think S&P might touch 7,000, and earnings are projected to be, about 270 to 280. So 2025 multiple gives us that. So we are in a pretty good shape, Shilji. That's the only market probably doing pretty well, as of, although Europe had a bit of a blip, but I don't
Yes.
think it's going to be well. Yeah.
Right. On that very positive note, Anuragji, thank you so much for your time. As
Sure.
always, it's such a pleasure to speak to you. And once again,
Like,
a deeper thanks that you remained awake at this hour in New York. We hope to host you in Delhi whenever you
Sure.
are on this side of the home country. Please let us know.
Anytime, sir. 100%. 100%. It's due.
Done.
Thank you.
That, ladies and gentlemen, was Mr. Anurag Singh, Managing Partner at Ansit Capital. He joined us from New York at this point of time. Lots of very, very hectic activity that is now going into the market. We are just 10 minutes away from the pre-open, and we will shortly be joined by Mr. Devin Choksi, Managing Director at DR Choksi Private Limited. This is a PMS company which manages money for ultra HNI individuals, and of course it's a broking firm with 4-generation experience in the market. Devin Bhai is sipping water. As you can see, he's extremely fit. I've never seen him eating anything more than what is necessary, and this is for the last 30 years that I've had the pleasure of knowing him. Devin Bhai, good morning and a very warm welcome. It's going to be a very busy day today. So what are you looking at? The GIFT Nifty, Reliance Jio, the broader markets, tariffs, automobiles, auto ancillaries. What is on your plate today?
Good morning, Shail. Well, I think today the best time to probably switch off the terminal and sit and relax.
Yeah.
Because I think the way in which the tariff business is working, it has become, I think, a laughing stock in the world. One day, I think you have 25% tariff on South Korea. Next day, you make it 15% on South Korea. One day, you have 15% on India. Next day, you make it 25% penalty on India. I guess I think this is not the way in which the global economy functions. On a very serious note, I think if you are the businessman and if you are in a trade, certainly your import and exports, I think you can't plan it well, and neither can you manage your logistic well. It's going to be a challenge in whichever part of the world that you are operating, whether in India, whether in America, wherever you are operating, it's going to be a challenge. Realistically, couple of points I think which I have put across. India's import from America is somewhere around close to $41 billion. And India's export to America is somewhere around $87 billion. There is a gap of somewhere around $45 billion between the two countries. On one side, I think there is a gap which is a requirement to be filled up. On the other side, I think the trade basket has to be expanded to $500 billion as both the countries have in principle agreed to. On the top of it, if you are putting this kind of tariffs, my take is that I think it is going to be suicidal for USA particularly because we have the alternate source of importing the material which we are importing from America. But is America having the alternate source of importing material which India is exporting to them, particularly pharma products? Is a question mark I think which they will have to answer. If they don't, US currency is under threat as I see it.
Right. So with this background in mind, ladies and gentlemen, we'll again look at the GIFT Nifty. We are about 7 minutes away from market open in the pre-open space, still down 190 points. Devin Bhai, we have seen these knee jerks in the market for years together. Now, what is your strategy for Dalal Street in the remaining part of this quarter and at the start of August? We've seen about a 4 percentage point dip in the Nifty. Q1 has been entirely forgettable. What do you think are the triggers which are sitting on Dalal Street on the long side, if any?
Well, I think couple of things. Structurally, we are bringing down our dependency on the dollar, I think very significantly. About 33 countries with whom we settle our trade today in our local currencies, I think which is a fundamentally important point, which means that knowingly, unknowingly, we have started saving at least 4 to 6% of the trade cost between these countries when we are executing the transaction, either import or exports, because the currencies, the trade is settled in the local currency. That is the first point. Second important point, we have created a situation wherein we are structurally bringing down the cost of energy in the country. We have been paying about 9 to 10 rupees per unit as industry Today, I think the blended cost of power along with the renewable has come down to 7-8 rupees at this point of time. And fast forward 2030, we are likely to see that cost coming down to 4.5 to 5 rupees. So it is a structural change in the economy. As far as the cost of production is concerned, we remain highly competitive in the global market. That is the underlying message. The third most important point, I think, as I see it, logistic cost, I think, which used to be 14-15% of the GDP, has come down to 9 to 10% of the GDP. And China example says that 5 to 6% of GDP logistic cost is achievable. Should India aim at that, maybe I think in 6 to 7% category of logistic cost will be achieved. So these three factors are suggesting that we are actually speaking, I think, structurally beginning on our cost structure, and that is getting reflected into our interest rate inflations everywhere. So all in all put together, if the currency in the near term behaves well, rupee currency in the near term behaves well, I think we are in for, I think, a good amount of growth as far as next 5 year journey is concerned, be with America or without America.
I'll also request the PCI to kindly fire the long-term chart of Reliance Jio, and no better person than Devan Bhai to discuss this particular stock. Yesterday evening, press release by the company said that it would be allocating warrants, 50 crore warrants. I'm talking about Reliance Jio. Let's get that price. Yes, 50 crore warrants at 316 rupees 50 for the promoter family to raise the stake. This will be raising somewhere like 15,000 crore rupees for the company. Devan Bhai, please analyze for our viewers why this is happening and why is the company raising stake, and what will Jio do with 15,000 crores?
Good points, Sahil. I think let me answer this in detail. GeoFin as a company is a company for investment under the RBI's NBFC rule. That means I think they have got the business to invest in different companies in which I think they are operating. Like Geo Credit is one company in which they are operating. Geo Payment Bank, I think, another company in which they are operating. The tie-up for the joint venture with BlackRock, I think, for the AMC company and also for the wealth product distribution company, it's operating. Tie-up with Alliance for reinsurance is also now in place. Now, with this particular money, according to me, is raised largely for this reinsurance business. In my viewpoint, I think the Alliance has got the practical experience of running this entire business for decades, and Geo would be probably underwriting the insurances, I think, in the country for the first time. So they are combining together, and over there, the capital adequacy requirement is absolutely on a higher side because this business assumes significantly large risk. For example, if you are raising 15,000 crore of equity, and if you are deploying 15,000 crore into the equity of the joint venture company, and equivalent amount is, say, for example, deployed by Alliance. So that means put together both of them have deployed 30,000 crores. So on that, I think they can actually, I think, write the underwriting insurance on the reinsurance of 15,000 crores. Now, this is where probably the game is that I think you are actually required 200% margin for writing 100% of liability on the reinsurance side. Given that situation, it's very capital intensive business, and no wonder I think they have put in this kind of money into it. In my viewpoint, the Reliance Jio put together in the insurance business, they become probably, I think, the largest, or maybe I think little short of becoming largest against, I think, GICD as far as I think this particular insurance business is concerned. So one needs to remain relatively more optimistic about the prospects going forward. The money is going into a business, I think, which is going to be a sizably large business, largest in the country, eventually, I think, in a couple of years.
Devan Bhai, we have just 2 minutes left for the markets to open. One very quick view on Tata Motors, this Iveco transaction worth more than $4 billion. Is it EPS accretive, or will this result in Tata Motors slipping below 600? What's your view on the stock and on the deal?
One line answer side to this is, I think, if they have succeeded in GLR in bringing up the cost structure and if they have plotting the profits, I think they know their maths very well. Iveco is basically giving them an opportunity to enter into the global market along with the technology platform that this company has created. Tata Motors commercial vehicle business, which is going to get demerged by the end of this year, as the program is from the passenger vehicle business, is a 75,000 crore business. And should Iveco get merged into this particular activity as a commercial vehicle business, probably combined size would be more than 2 lakh crores, so which is 3 times bigger than what they are currently operating at. In my viewpoint, I think if Indian companies are not stepping into the global environment, then we cannot be progressing as a third largest country of the world. These companies are showing the path to get into the global environment and be keeping the global market as their in their forefront as far as I think the business model is concerned. So I would remain distinctly optimistic about the prospects going forward for Tata Motors. Maybe in the near term, lot of adjustments will happen, but at the same time, I think this could be a good big time opportunity because the passenger vehicle and the commercial vehicle segments are getting demerged, and you are going to become, I think, the investor of the commercial vehicle business along with, if you are a Tata Motors shareholder today, with the global footprint as we are talking about. So remain cautiously optimistic on the prospects going forward, I must say.
Okay, ladies and gentlemen, we are now just 30 seconds away from the market open. Remember, the GIFT Nifty is pointing to a 180 point downtick. This is the triple witching day. We have lots of pain into the market, most likely because of Trump's additional 25% tariffs plus unknown penalties which will be hitting several Indian firms, and we have a 2 percentage point dip on the Nifty, 700 points, 3 percentage point fall at 24,100. This will improve for the better, but let's look at the stocks that are hit. Auto companies led by Tata Motors, 25 rupees lower on Tata Motors, 648. Two reasons. One is the US tariffs, the other is this transaction with Iveco. Now, HDFC Bank, 100 rupees lower, 5% down. We have ICICI Bank 5.7% lower at 78 rupees down. What else is hurting? Reliance 3.5 percentage points lower, 1360. This is the state of the top 10 index heavyweights. Let's shift focus into NSE 500. Okay, Infosys is down 2.5%. Tata Steel is down 10 percentage points despite a stunning first quarter performance at 145. What else is hit? Let's look at the auto space, in particular Bharat Forge. These are all exporters to the US. Let's look at Bharat Forge, 2 percentage points lower, 1160. Let's look at Sundaram Fasteners. That is also a company that in the auto ancillary space exports a lot to the US. When you look at the auto ancillaries, they will be in serious pain. Endurance Technologies, 19% lower. Sona Comstar, one of the biggest suppliers of ancillaries to Tesla, 6% lower at 432. Gabriel India is down 3.8%. This, ladies and gentlemen, is how markets are reacting. The Nifty now sensibly just 200 points lower, down about 1% at 24,641. So the knee jerk is now getting priced in. Let's look at textile stocks. They need to also be looked at. Let's look at Himmat Singha Seede. This is a textile stock which is fairly well known. Also, please show Vardhaman Textiles, Himmat Singha Seede 5% lower, Kitex Garments 5% lower. Look at Gokal Das Exports, that is one of the biggest exporters, down 4.5% at 850. So it's the knee jerk that is now getting priced into the market. Let's look at the top losers on the NSE 500. That will give you an idea about what the market is thinking. Vardhaman Textiles is the top loser, down 10%. Wellspun Living down 5.5%. Sona BLW, that's the Comstar, 5.5% lower. Endurance Technologies 3% lower. So this is how, ladies and gentlemen, the Indian market is reacting at the moment. As also frontline counters, 5% down tick on ICICI Bank at 1408. Pharma stocks are down, but I don't think so they will have that kind of a knee jerk. It will come back. But 175 points down on the Nifty, which is in sync with what? the gift Nifty was saying. Devan bhai, how do you see this market reaction in line?
I think it's a knee jerk. It's a panic. I think that people are having in the mind. I don't think that I think this is lasting after a while. So I would like to I think allow the market to open, stabilize, and absorb this knee jerk. We have seen plenty of them. I think in past. On a day of COVID lockdown, I think this time I think the market went into lower circuit, and thereafter I think it has made a history of I think creating wealth for investors. So this kind of disruptions they don't cause a permanent damage to the market. They are actually, I think, becoming an opportunity to buy something at a lower level. When the fundamentals of the business remain strong, I think one should not be unduly getting disturbed about the environment which is happening at this moment.
Okay. With this background, ladies and gentlemen, let's now look at what's happening on the rupee. This is a bit of a worry, remember. With the exports hit, there is a likely downtick on the rupee as well. What is that? It's opened at 7 paisa lower at 87.72. Yesterday's low was 87.65. So let us see whether it goes beyond that or not. Remember, a new fresh low on the rupee is expected because exports are getting hit. Devan bhai, any view that you would have on Indian IT?
I think passing through a tough time, obviously, because the customers out there in the US economy, particularly Europe, is okay still. But in US economy in particular, I think they are indecisive about I think placing further orders because they themselves do not know where exactly the trade is going now, given the kind of a crazy economic policy that the country is experiencing at current times. So I think most of the corporates have been found talking about this subject that the clients are not taking decisions and they will not take decision in hurry till the time I think this environment settles down. So I think that I think if the tough time continues for IT companies, at least they will continue to execute the current order book that they have. I don't think that I think a big order inflow that we were talking about earlier is becoming a reality, at least in this quarter. Maybe I think next quarter it can tell a different story.
Okay. I'd also like to see how Tata Motors is reacting. Let me just look at Tata Motors in a different space at the moment. Tata Motors is down about 1% at 662. Remember, the stock has halved. For various reasons why we shouldn't be getting into it. But a frontline Nifty company with sales of 4 lakh crore rupees is available at a market capitalization of half, which is 2.5 lakh crores. That itself, ladies and gentlemen, with the low debt, actually it's net cash positive, plus a PE of sub 10. Should be an attractive candidate at current levels. Devan bhai, are you pouring in some client money into Tata Motors at these levels?
Yes, I think we believe that I think it's a time to accumulate because you are buying a combined company which is a passenger vehicle and commercial vehicle. A passenger vehicle franchisee also includes JLR portfolio, which is according to me I think is a significantly large portfolio, and changes happening with the Jaguar coming with the all electric, born electric vehicle range in 2025 onwards. I think is suggesting that this company is now probably geared up to give the better performance going forward. So we remain optimistic about the passenger vehicle portfolio. On the contrary, we believe that a higher the tariff that the countries like America would place and the lower cost of production that we have for the vehicles, we are making our road path very clear about exporting good amount of quality vehicles into other parts of the world, including Tata Motors, Marutis of the world. I think could be I think real beneficiaries. In my viewpoint, commercial vehicles, as we discussed a little earlier, Iveco acquisition is accretive on 2-3 counts. One, it is opening up, I think, the market size, which is the largest, fourth largest company in the European segment. It's opening up the market for the vehicles, I think, for Tata Motors in Europe, along with the technology which they are basically looking at, largely in the area of hydrogen powered vehicles. So in my viewpoint, I think we are going to see a game changer move going forward from this commercial vehicle acquisition as well. remain cautiously optimistic, as I mentioned earlier. We would like to add this particular stock in gradually in the fall in the portfolio.
Okay. So be in no hurry, but keep Tata Motors on your radar. A stock that's available 50% off its peak and with such attractive valuations and a brighter future should definitely be something that needs to be looked at. Okay. Now pre-open has settled. 200 points lower on the Nifty, 24,642 is in action. The Nifty Bank is trying to open 420 points lower, 55,728. The IT index 262 points lower. Now look at stocks that have settled 10% lower in the Nifty. Sun Pharma 1560 for you, 10% lower. Tata Steel 10% lower, 145.22. Okay, it's now just improved a bit. These are pre-open rates which keep on changing. Dr. Reddy's 129 rupees lower, 1162. Okay, now it's improved. Okay, Titan 36 rupees lower at 33.40. So this is how it is shaping up, ladies and gentlemen. A downtick on Nifty 200 points to begin with. Whether on short covering you will see the Nifty move up, only time will tell. That is a strong possibility. Devan bhai, any defense picks that look attractive to you at current levels?
The companies are okay business-wise, many of these companies. However, the valuations are not okay. They are probably discounting the growth at around 35 to 40%, as against around 15 to 20% kind of a growth at the best. I think some of these defense companies are producing. So market has actually priced the growth higher at current levels, and that's what I think my concern would be. That in a given situation, if things don't work out well in the economy, probably I think this premium valuation that one has given to these companies, I think they might see some amount of pressure, and that would be a better time to buy them into the portfolio. There are plenty of new defense ecosystem provider companies are also entering the market either through SME market or maybe I think 2 years hence, I think in the public market on the main board, they are expected to enter into. And that's where probably I think one is looking at some of the opportunities and chance I think everyone would like to see. But as of now, I guess I think the higher valuation is larger concern than anything else.
Okay, so that, ladies and gentlemen, is how the markets are structured on this very important day, the end of FNO in July. We are down about now almost 5 percentage points on the Nifty. I'll request the PCI to kindly fire the long-term chart of the Nifty for Devan Bhai's understanding and views. Devan Bhai, what do you think is the downside on the index at current levels?
Prior to this yesterday's announcement, I think we had put across that Nifty holds the ground and probably it might correct around 24,500 to 24,200, essentially forming a range between 24,200 to 25,800. That is a view that we have put across. And I think that at this point of time, this view has not changed. Maybe if we are seeing the adverse consequences of I think whatever the announcement has come, I think we will have to change the view. But as I always say, that I think till the time it is not completely damaged, I think don't get into all these speculations. Trump has a habit of changing the statement every single day. So frankly speaking, I think it can probably change the statement tomorrow. And you never know, I think, how the thing would shape up, etc. So in my viewpoint, I think 24,200 remains crucial support level for Nifty at this point of time.
Okay, okay. Devan bhai, a view on State Bank of India. They've raised 25,000 crores via QIP, a strong set of earnings, and of course, the valuation remains something that the markets are not appreciating. What is the house view on SBI?
We are bullish. I think we remain bullish on this particular business. Down, interest rate is down, I think, which is good because I think the liability side of the balance sheet is much more healthier than before. The treasury portfolio of the balance sheet also is, I think, remaining much healthier because of the mark-to-market gain that you get on the holdings. And along with that, the typical commercial lending with MSME SME included into the portfolio, I think remains absolutely on a very convincing side in the economy. In fact, I think 26 as a financial 20, year 26, I think has started on a good and promising note. 7x this particular hurdles that we are facing at this point of time. We believe that I think the credit offtake would be at least 1.5 times higher than the growth of GDP itself, which means I think more than 15% kind of a growth we should be seeing in credit offtake. So we remain bullish on some of the larger ones like SBI and I think among them HDFC with Bajaj Finance kind of companies in NBFC as well.
Okay, I'll request the PCI to kindly fire the long-term chart of Larsen and Toubro. This is a stock that is very, very close to Devan Bhai's heart for the last 3-4 decades that I'm personally aware of. Devan Bhai, 6 lakh crore is the order book in all sorts of new businesses such as hydrogen, such as setting up better plants across the UAE, across the Middle East. L&T is available around 200-day DMA. What is again your thought on this multi-bagger and wealth creator?
If I'm an insurance company, if I'm a sovereign fund, if I'm a pension fund, I think I'll latch onto this opportunity. Because I think such businesses, they give you opportunity for next 10 to 25 years at current levels. I believe the way in which I think this company is shaping up its business and I think creating their foothold into every new segment of business as well, where I think they're creating the larger order book. I'm talking about green hydrogen as well. I believe that I think this company would remain in a very strong holds of some of the large investors going forward as well. They are actually having a visibility of at least 2.5 to 3 years of order execution at current levels. And that is what is more promising, that every stage I think they're building this visibility of at least 3 years of runway in front of them. So in my viewpoint, I think the business conditions remains very, very strong. At the same time, I think the margins improvement is happening in the current year as well. So in my viewpoint, I think with improvement in margins and higher predictability on execution side of the book, I think they are going well even in the near term as well. So yes, I think any shock in the price due to any kind of external factor and corrections, I think would be a buy opportunity into this company.
Okay, ladies and gentlemen, the markets are upon us. It's a 163 point downtick on the Nifty. The day's low, please mark this, is 24,635. We should see some kind of short covering from these levels as people take advantage of this downtick. And now let's look at prices which are upon us. Bank Nifty 310 points lower, the IT index 250 points lower. The advanced decline ratio is a terrible 1:10. Just 250 stocks are in the green, 1932 are in the red. All 20 indices are in the red. The small cap 100 index is the top loser, down 1.5%. Midcap select is down 1.3%. Very quickly, let's look at the top losers as to how this knee jerk is getting priced in the NSE 500. Textiles hit, Wellspun Living down 6 percentage points. Vardhman Textiles down 4.3%. KPR Mills down 4%. Alok Industries down 3.6%. I need to see what is happening on Himmat Singha Seede as also Gokul Das Exports. Just a minute. Yes, I have it in front of me. Okay. Gokul Das Exports is the top loser, 7% lower at 824. Kitex Garments 5% lower. The losses are anywhere between 2 and 7% as far as the textile space is concerned. Onwards to auto. What is auto doing? Let's look at Tata Motors, let's look at Bharat Forge, let's look at Sundaram Fasteners. These are 3 companies which have direct exports to the US, not to mention Sona BLW. This will be something that will be watched by the markets with great interest. Okay, you have a 5 percentage point downtick on Sona Comstar, 1 percentage point on Endurance. Gabriel is down 3 percentage points. So that's how it is moving at this point of time. As far as markets are concerned, we have a 184 point downtick on the index as far as Nifty is concerned. Let's look at the index heavyweights. This is primarily because of Tata Motors down 1.8%, Reliance down 1.6%, Bajaj Finance down 1.2%, SBI, TCS and L&T are down about half a percentage point each. I'd like to see what Reliance Jio is doing because of the numbers that have come in. Okay, Reliance Jio is up 1.3 rupees at 316.45. How about M&M? After a stunning set of numbers, is slipped a bit below 21 EMA, 44 rupees lower at 3163. This is how markets are shaping up at this point of time. The bank Nifty now down 322. Let's look at some winners, if any. That will be an interesting thing to look at as far as the NSE 500 is concerned. HEG 6% higher, 568. Sagility India, this is an insurance play, a KPO which provides a lot of back-end work for the US insurance company market, 4.6% higher. Look at Naveen Flooring. This is a new high, ladies and gentlemen. Naveen Flooring came up with a stunning set of numbers yesterday, and the stock now at a fresh high as far as prices are concerned. Stocks that are hitting all-time highs: Coromandel International Fertilizer Company, Naveen Flooring, and this is GV Transmission and Distribution, earlier GE T&D. Any volume buzzers in the market? Yes. Zentech, massive selling pressure, 3.5% down. This is the drone maker, which is now at 1468. Very, very heavy volumes. 10 lakh shares have been traded, 5.4 times the 5-day average, and we are not even in the first 6 minutes of trade. HEG 7% higher. It's a blowout here. 1.3 times gains. This is how it is moving, ladies and gentlemen, at the market so far. Naveen Flooring is something that you need to look at as far as markets are concerned. I am requesting if there is a guest that is likely to come up. Yes, Mr. Dheeraj Relly, MD and CEO of HDFC Securities, will be joining us at 9:25. This is how the markets are placed at this point of time in Thursday. Remember, this is the FNO expiry. Let's look at the FNO space at this point of time. It will be very, very crucial for markets to react. Let's look at top losers in the FNO space. Indus Stars, 4.5% down, 365. IIFL Finance Limited, 3% lower, 486. CAMS, this is Computer Age Management, 3.5% lower at 3762. Let's look at some very important data on top gainers. Jio Finance and Indraprastha Gas. There is absolutely no denying the fact that Jio Finance has a chart which is doing fairly strong. Let's look at rollover analysis. Remember, RBL futures, RBL Bank futures are now out of the FNO ban. So you have an interesting move coming in at this point of time. Rollovers in terms of percentage are the highest in Inox Wind, Muthoot Finance, Jindal Steel, Jindal Stainless Steel futures. So that's how the market is moving at this point of time, ladies and gentlemen. Anything interesting that comes to the screen, let me point that out to you. Let's look at how the shape of things is in the mid-cap space. Remember, these were the two top losers, the mid-cap and the small-cap index. Let's look at how the losers are there in the Nifty Mid-Cap Select. The same set of companies, HPCL, this is painful, 2.6% down, 415. Bharat Forge slipping to 2.5% down at 1157. Dixon Technologies again hit 2 percentage points lower. Any gainers in the mid cap select 100? Yes, just 3. So the advanced decline ratio is 3 is to 47, ladies and gentlemen. Marico, Max Health, and Emphasis. These are the 3 companies that are doing extremely well on the markets as far as prices are concerned. We have a guest with us, ladies and gentlemen. We have joining us on the show is Mr. Dheeraj Relly, MD and CEO at HDFC Securities. Namaste, Dheeraj ji. Uh, Interesting times. You have the tariff war hitting its peak. You have Tata Motors thinking of buying a top end European truck maker. You have Reliance Jio putting in 15,000 crore rupees for its insurance venture. And of course, you have Mr. Trump. और क्या चाहिए आपको बताइए?
Yeah, I think this announcement of tariff is something having an overhang on all the discussions we are having about the markets. Rightfully so. Also, it's a high impact item. On the Liberation Day on April 2nd, these tariffs were announced, and then after that, we have been seeing a lot of wheeling and dealing and roller coaster engagement with the US. And today, when we are talking, we are at 25% tariff, which will have some impact on the markets. And I think there is some knee-jerk reaction already in the markets for the same. But I think it's not just about the tariffs alone. I would attribute the sideways movement in the market to tariffs, weak earnings, and also the issues regarding the valuations. So these 3 factors are in a culmination of these 3 factors are actually having a bigger impact. And on top of it, also we are seeing FPI sellings continuously.
Okay. Mr. Relly, what are the ultra HNI clients of HDFC Securities doing at this point of time? As you mentioned, the market is sideways. There is an absolute lack of volume both in FNO and in cash. How are they tiding over this time? Are they buying into ETFs? Are they buying into frontline counters? Are they looking at mid caps or small caps? What's the strategy at their end?
I think in the third quarter post Diwali, most of the ultra HNIs have shifted their portfolio to large caps, because that's something we advised all our investors, including ultra HNIs, that there was a froth at that time in the mid cap and small cap valuations. So gradually they have been shifting to the large caps. So to that extent, they have been somewhat protected in these highly volatile markets. Right now, I think it's all about the bottom up stock picking and not looking at the top down approach. So they are optimizing their portfolio by looking at the opportunities, and we see there are opportunities in almost all possible sectors if you do a bottom up stock picking.
Okay. And what is the top advice uh, uh, in the portfolio as far as mid caps and small caps are concerned for ultra HNI clients?
So we have been suggesting them that, like, look, it's time for to be inward looking. Go for the domestic economy facing counters, and that's what we have been recommending them. We are seeing some green shoots in the consumption. Last year or so, we have seen significant challenge in the rural consumption. Even urban consumption have been somewhat subdued or plateauing. Whereas, now with the good monsoon, we have seen in February, March, the consumption have bottomed out. So we look at mid cap, FMCG, and low value discretionary space as one of the big opportunity. Other than that, I think we also like building material, particularly cement. We are seeing 7 to 8% CAGR of top line growth for the cement industry, with unprecedented consolidation in the cement industry. we believe that the pricing power is back in the hands of some of the large players, and with demand rising both from commercial as well as residential, we believe that building material, in particular cement sector, will continue to do well. Banking sector as such is available at a reasonable valuation. Of course, we have had couple of banks earning issues, but I believe those were also one-off and not a sustained trend. So we believe that NIM compressions will be taken care of from the quarter two onwards, something that have been having an overhang on the banking stocks. Uh, RBI has taken significant monetary measures to help the industry. There's enough and more liquidity available. So from that point of view, we like both public sector banks as well as private sector banks.
Okay. Mr. Gill, I'll just request you to pause a bit. We have a very, very important information coming in from M&M. This is Mr. Rajesh Jejurikar, who's speaking to our reporter, Mr. Chetan Bhutani, on the impact of US tariffs on M&M in particular. Please take a look.
The Trump's tariff warning of 25%. I know the auto parts industry already falls under 25% purview that has been signed earlier. But you have access to the North American markets as well. So are you affected, and what is your reaction on that, sir?
Yeah, Chetan, so we actually don't have it's not a material part of our business from our total volume or profit impact, and beyond that, I will go to comment at this stage.
But as an auto industry, sir, any comments, sir?
No, not at this stage, Chetan. The news is just coming, so we'll let that settle.
That was Mr. Jejurikar, ED and CEO of the auto division at M&M. This is the chart of Nifty. I'll request the PCR to kindly fire M&M. More importantly, the earnings were pretty good, and M&M has been one of those fabulous outliers in the Nifty. For the last 5 years, M&M is the top wealth creator on the Nifty. The stock has trebled in the last 6 years or so. A 5-year return is 4x. Wonderful, wonderful. Let's get back into our conversation with HDFC Securities. Sir, when you talk about large cap stocks, Mr. Relly, what are the 2 or 3 top ideas that the research team at HDFC Securities has shared with their HNI clients?
So I will not be able to talk stock specific, but I have already shared with you that we are now advising our customers to be more skewed towards the domestic facing portfolio, including the banking space.
Okay, fair point. How about a view on gold and silver? Both these precious metals have given stellar returns on a year-to-date basis for people who had the foresight to buy into them. A view at current levels: silver above 1,13,000 per kilo and gold now about 97,000 rupees a tola. Mr. Relly, what do you think?
See, we all know very well that the asset allocation helps investors, individual investors, to make better returns than thus timing or stock specific selections. So that way it's important to, based on the risk appetite of the individuals, to have at least 5 to 15% kind of an allocation on gold and silver ETFs. More so silver ETFs. We have recommended silver ETFs to our investors sometime 9 months ago, and since then it has given a very good returns also. But it's a more of a asset allocation call, and we believe that both precious metal, gold as well as silver should be the part of every single investor's portfolio. The allocation can depend upon their risk appetite.
Okay. We'll again take a look at the Nifty, ladies and gentlemen. It's the short covering that's pushing the Nifty higher. 24,713. Dow down just 142. Why is this critical? Look at the day's low on the Nifty, which is somewhere like 24,635. So that's 65 points plus another 12, about a 70-80 point knee jerk from the day's low. Look at the bank Nifty, now down 302 points. The day's low is 55,700. We are at 55,850. So 150 point uptick. How about the IT index? There isn't much hope there. Day's low, what you see is the lowest since 23rd of April. Let's get back into the conversation on IT stocks, sir. Any view that you have on this 10%, 11% downtick on the index itself in the month of July? Any bottom fishing that you've suggested to clients on maybe Infosys TCS?
So we have been cautious and have an underperform on ITS for a long period of time. Of
Okay.
late, change our stance to now neutral. We believe that the uncertainty is still there, but it has bottomed out. From that point of view, I think there are opportunities in the mid-cap IT space. Large players still having issues with the top line growth as well as deal wins. So we've seen some deal wins in the Infosys in the last quarter, but still a long way to go. US has been a large market for all these companies. We are seeing there is an uncertainty about how the business will pan out in various countries, and based on that, there are limited investments are done in the IT and ITS side, and also there is a significant overhang of what will be the impact of the agentic AI on the business models of some of these companies. So to that extent, it's still we are still cautiously optimistic on that, and we are very, very selective in IT and ITES.
Okay, that's the view that Dheeraj has on the IT space. We'll just take a detour into the markets at this point of time. The first 20 minutes have lapsed. What the market has done is get 24,700 for the bulls. Now let's look at the volume that is buzzing as far as prices are concerned in the NSE 500. No doubt the top traded counter is Jio Finance, 3 percentage points higher. The promoters infuse 15,000 crore rupees, nearly at the market price, by 50 crore warrants for themselves. This 15,000 crore rupees will be used to fund the new insurance pact that Jio Finance has with Alliance. Then of course you have two other major businesses, which is the mutual funds business that they have started, and of course the broader lending. So top form today on Jio Finance. Is this a record high? Almost, because we had seen Jio Finance scale up rapidly. Just a moment, let me see what the record high is. No, it's too far away, 393, and at the moment you are at 329. Let's get back into the conversation with Mr. Dheeraj Relly. Dheeraj, was Jio Finance amongst the recommendatory stocks at HDFC Securities?
No, I don't think so. We have recommended. In between we had a coverage, but I am not sure whether we have a coverage on Jio Financials right now. So this is not a stock specific recommendation. However, I strongly believe that financialization of savings as a theme is on the cusp of exponential growth, and it is playing out already, and it has a long runway available. So whether it is asset management space or a wealth space or the non-banking financial companies, we believe that there is a significant opportunity for all these areas. And Geo, particularly, I have interest in all of these activities, particularly on the asset management side. They have a good partnership, and now they have good partnership on insurance side as well. So these are all penetration stories. Insurance penetration in India is still abysmally low as compared to the developed nations. So there are significant opportunities to increase penetration. And knowing the Geo, they are known for the scale So I'm sure that they will continue to do well in these areas. However, I would still put a word of caution. These businesses take some time to build. It is not that you can get an overnight success in the financial services. It's all about scale, trust, ecosystem in place. So one has to be really be mindful of all these things.
Okay. The other major turnaround, sir, that has happened is in the chemical space. Lots of companies, Naveen Fluorine now at a record high, strong moves coming into Punjab Chemicals. Look at Excel Industries. Look at how other stocks have performed, especially SRF. What is the house view of HDFC Securities on the chemical space?
I think chemical space, we are seeing now the demand is picking up. Also, the prices war was going on and it has bottomed out now. To that extent, we believe from here onwards in next 3 to 4 quarters, the realizations will be much better. Competition is also tapered out. So from that point of view, we believe that the chemical sector will continue to do well. One can selectively add chemical sector in their portfolio.
Okay, okay. So that's the thought that is happening on the chemical space. Lots of stocks in the chemical sector are doing very well. Look at Sumitomo Chemicals. This has added 10% in this week itself to 646. You have a very sharp move coming into Coromandel International, 9 percentage points higher. Naveen Fluorine has added 7 percentage points. And of course, you have stocks like Tata Chemicals, 5% higher. A new high on Naveen is something that we've always tracked deeply in the F&O space. 24,700 slipping on the index, down now about 166 points so far. Sir, a view on the pharma space. This has been an outperformer as far as July is concerned. 20% gains on Glenmark, 20% gains on Laurus Labs. Midcap Pharma is shooting through the roof. What are the 2 or 3 recommendatory stocks that HDFC Security has in the pharma space?
The domestic facing pharma stocks have been doing well, so they will continue to do well. Our take is that there'll be a lesser impact of pharma on pharma sector of the tariffs, and in particularly, it's not easy for the United States of America to replace the generic and get generics from some other countries. So to that extent, to some extent, Indian pharmaceutical companies will continue to do well in the US, and from that point of view, we believe that there is a good runway available for the pharma sector also to continue to do well. It will be less insulated as compared to the other sectors like textiles and auto components, where we will have a negative impact because of these higher tariffs. And the one more thing in terms of penalties, 25% plus penalties, that something is can be draconian, and one has to be careful and watch that event to play out. My take is that today is not the day one can really try to look at the stocks. Like, let this event, let the knee-jerk reaction is over. Let's see what kind of a response Indian government will give to the tariff hike, and how they will negotiate further in next few months to see that there is a minimal impact. The statement came out that they want a mutually beneficial, fair and balanced discussion with the US. I think that's quite constructive statement from the government side. It shows their intent to really negotiate and come out with a better deal with the US. And my views are that that's the time one can really revisit the portfolio. Right now, one can take a pause and absorb the event in the market.
Yes, and sir, before you joined us, we had a gentleman speaking to us from the US. He mentioned the same thing, that for countries that have bent backwards and given away their sovereignty, the tariff is between 15 and 20%. what India has done is given nothing away, and we are at 25%. So 5 percentage points we can safely digest. हम सब कुछ दे भी देते तो भी 15 या 20% लगता, हमने कुछ नहीं दिया तो 25 लगा.
So there is one other way of looking at it. When we started these negotiations, there was a possibility that we could get a better deal, and hence we could increase our exports to the US, and the more opportunities will open up. So instead of getting into an advantageous position, now we are at a negative position. So to that extent, this is a disappointment. So let's not, uh, uh, undermine the importance of higher tariffs. So it is a disappointment, but I believe it's only transitory, and in next 2, 3, 4 months, things will improve definitely. I understand that India has its own compulsions of not opening up agriculture sector, because large percentage of population has a dependence, and it is the government has to take care of what kind of voting strength is there in the sector also. So it is okay to understand the government stance, but my personal views are that we should be, continuing our engagement with the US and try to work on an amicable solution, because the US is a very large partner for us. We have a $40 billion plus trade surplus with the US, and very good relationship on both political side as well as business opportunity side. So to that extent, I think we should be more pragmatic. Keep your foot grounded strongly. Keep your head down and work on the deal.
Yes, I think nobody could have put it as better as you have, sir. We just have to put our heads down and work. A $95 billion export to the US, which is just maybe 18% of all our merchandise exports, if hit with 25% tariff, really doesn't hit a country with a $4 trillion GDP as much as people are making out to be, and we can take it in our stride and move ahead. Of course, the markets react to news, and those are knee jerks, which is fine, but in the longer circumstance, you will see this as a very small hurdle. Unbelievable sanctions and unbelievable hurdles have been put on the path of our country in the 1980s, 1990s, as Sir will definitely bear out, especially on the nuclear program, on the missile program, and also on ISRO, which is the space agency. And we've done ourselves proud in these 3 areas. So this will also pass. Mr. Relly, thank you so much for your time, and it's such a pleasure to host you. Let's hope that the country makes the best out of this very, very bad deal, one-sided if I may say so, and we move forward in the days ahead. Thank you for your time, sir.
Thank you.
The Nifty, ladies and gentlemen, at the moment is 24,700, down 150. The Nifty Bank down 300 points, 310 points to be precise, and the Nifty IT index down 370. We are having a knee-jerk reaction to the imposition of a one-sided tariff by the US on India on merchandise exports, which are to the extent of about $90 billion from our country to them. And of course, we are also looking at triple witching, which is the expiry, the monthly expiry of futures options contracts on Dalal Street, as also a very, very bad quarterly earnings from the broader corporate India, and therefore you see markets in bad shape. We are now joined by Mr. Madan Sabnafis, a very, very well-known economist. He's now with the Bank of Baroda as their chief economist. Good morning, Mr. Sabnafis, and a very warm welcome on this somber day when a one-sided tariff has been imposed on Indian merchandise exports to the US. What is your gut reaction? Is this something that a $4 trillion economy can absorb and move on?
So we should remember that USA is our major exporting partner. So it has a share of around 18 to 20% in our exports. So definitely it is significant. We cannot brush it aside. Now, the number of 25% is not very different from what was announced in April, even though our expectations were that we would have a trade deal with US, which would result in a substantially lower tariff rate from the US. We were probably thinking it'll be in a region of 10 to 15%, nothing more. But as of now, I think the doors are not fully closed because the government has said that it was going to talk to the US. They are still in conversation. There could be a deal coming through. Now, coming to your question about how important it is for India, yes, definitely at a macro level, it may not seem to be very significant because our calculations are in the worst case scenario. If our exports to US comes down by around 10 to 15%, our GDP growth could come down by around 0.1 to 0.2%. Yes. So that's the reason why our GDP forecast was 6.4 to 6.6%, 6.4% being in case we have this particular tariff regime carrying on the way in which it has been put forward yesterday. However, I think at the micro level, that is where the concern is. When I say micro level, it's at the industry level. So when we're talking of the industries which are going to be impacted, like pharmaceuticals, precious stones, garments, electronics, I think these are the sectors where there could be an impact. Because if at all exports come down, we're not able to substitute through other markets, then that would mean that their output could get affected. Some of them being in the SME segment, there could be a more distinct impact. So I think the macro picture may not be that bad, but at the micro level, there is definitely concern. I think these industries would be concerned about the fact that India is having a higher tariff than at least Vietnam, Korea, Indonesia, as has been announced already so far, which means that they need to seriously get back to the drawing table and see as to what exactly has to be done to make sure that we continue to be competitive.
Okay. Mr. Sabnafis, two sets of questions. One, we've seen a lot of countries sign away their sovereignty to the US in terms of their tariffs and yet get hit by 15-20% tariffs. Here, India has stood firm, especially on its agriculture and dairy sectors, not opening them to the US. We've been hit by additional 5 percentage points. Do you think this is a bad deal? It could have been worse, but why negotiate with both your hands tied behind your back and pushed to the wall? What's your gut feel about the Indian strategy?
No, I think it's very clear that India wants to definitely protect the interest of the major stakeholders. So especially if we're talking of agriculture, I think that's the tricky issue out here. I think that's a genuine concern which everybody has, and that is something which the government has vowed to defend. So I don't think there's going to be any compromise out there. But if you look at the history of trade agreements which are signed between countries, it's always a case of negotiation where both the sides will have to give a little bit and you get a lot. Okay, so everybody works on that particular basis and then there's an equilibrium which is reached. So I think even when you're talking of the European Union, UK or Japan, which have gotten away with lower tariff rates, because the US has said 10% is going to be the threshold, anything above that is what you really negotiate. I wouldn't really say that they've given up the sovereignty. They've definitely thought through the deals and seen what is best for them. So I think there is probably room. I think that's the indication which I get from what the ministry has been talking of, that there is room for negotiation. And at the end of the day, it will be a deal which is mutually acceptable to both the parties. So we have started off at a certain level. I think there is definitely room. I think that's the reason why US has opened the doors for negotiation with every country. And now we need to see as to how much of it is something which we can do and something which we cannot. And I think that the government is best placed to take that particular decision.
Mr. Sabnafis, one more point I would like to have your opinion on. There is this threat, the veritable sword on the neck of India when it comes to exports of Apple phone, iPhone from the country. Now this has been one of those rare success stories that we've enjoyed vis-a-vis the US. Do you think Mr. Trump has this uncanny ability to snatch defeat from the jaws of victory as well and also hit that one too?
See, I think nothing can be ruled out today because things have been fairly whimsical from their side. But I think we have been very steadfast in our views on what we are going to do as far as any trade agreement with any particular country is concerned, including the United States of America. So as we have seen that up to now, there's not been any compromise made by the government. And as I told you, 25% is something which can be absorbed at a macro level, though specific industries could be affected. So today, when you're talking of electronics, yes, that is one of our major exports which we are doing to the US, and they would of course like to have certain compromises made. So again, I would say that the government would be better placed to find out what would be the best deal when it comes to any particular industry.
Okay. Mr. Sabnavis, the other thought that strikes me is that for the moment, Indian software exports and pharma exports are outside the ambit of this 25% tariff. Given that Mr. Trump is, a tough negotiator, do you see these two also being pulled into the orbit of higher tariffs?
See, actually, as far as Mr. Trump is concerned, I think, as I told you, things have been fairly whimsical right from the beginning. There have been different industries which have been targeted, some tariffs which have been higher also, like for the metals, which have already been imposed. Even in terms of pharma, there was a separate announcement which was made, which was not supposed to be a part of the April announcement. So I'm not really quite sure as to what is really going on. So all that I can make out is that he believes that he likes to announce something which is big and then get countries to negotiate, and then you probably settle at something which would be acceptable to both the parties. And as far as he's concerned, he would say that rather than be at the position which America was when he took over as president, he has gotten something better. So it's all a case of the art of negotiation, not just across countries, but also across different products and industries.
Mrs. Sabnavis, how do you react to the fact that we just had a statement coming in that they have a trade pact with Pakistan. The US is hunting for oil with Pakistan and is hoping to export that oil to India. What does that speak of the thought process of the man in charge of White House?
So again, I will go back to saying that it's very difficult to know exactly what is the major goal which he has in all these entire things. He just is talking openly about making America great again, trying to recreate jobs out there, and making sure that they have the upper hand over other countries. But I don't think it's very much that easy in this current economic order, because I think the kind of power which India has in the global economic order is much different from what it was earlier. We're definitely a major power. The same holds, of course, for countries like China. So it's just a case of saying that makes a certain kind of an announcement, tries to do everything that is possible to rattle all the other trading partners, and then works to see in case there is a kind of a solution which comes through. So I think it would be the classic game theory, which is an operation which Mr. Donald Trump is indulging in. And I don't think he has any specific goal, but it's just that I want to be better off than what I was earlier. And I think that's the ploy which he's using.
And Mrs. Sabnavis, for you and our viewers, there is another tweet that has come in from Mr. Trump. And this time he says, I don't care what India does with Russia. They can take their dead economies down together for all I care. We have done very little business with India. Their tariffs are too high, amongst the highest in the world. Likewise, Russia and the US do almost no business together. Let's keep it that way and tell Medvedev, the failed former president of Russia, who thinks he's still president, to watch his words. He's entering very dangerous territory. So before going to bed, it's difficult to elicit a smile out of Mr. Sabnavis, and that we've managed. That itself speaks volumes about what Mr. Trump thinks and what he tweets. Mr. Sabnavis, over to you, sir.
See, now these are all his own personal views, and I think he's the president of the United States of America, so I think everybody pays attention to it, and all of us are discussing this particular issue. But I think it's his personal view. And as I mentioned, that economic relations are much stronger between different countries. It just doesn't go according to what has been tweeted right now. And I think India has shown that we are going to ensure that we remain as sovereign as ever. And that is the main thing. We're going to do everything that will make sure that we do not compromise in any significant manner. Maybe at the margin, there are certain kind of concessions which can be made, which I'm sure that the government will work out to the extent that it's feasible. But on the whole, I think we have stood very firm, and I think we need to be proud as Indians.
Yes. Mr. Sabnavis, because you've watched the economy more closely than any of us, you would remember in the 1980s and the 1990s, we were slapped with similar sanctions on three of our major nationally important assets, the missile program, the nuclear program, and of course ISRO. All three have been huge success stories in the decades that have followed on, and especially yesterday when Mr. Trump actually announced the tariff, ISRO was putting a US satellite in deeper space on the very engine that was held back by the US via Russia. Now, does the Indian economy have this resilience to withstand these tariffs, come out stronger, and maybe give a befitting reply to the US?
Yeah, absolutely. I think we have actually proved time and again. And in fact, the time period which you're talking of, 80s and 90s, India was definitely not as strong as what we are today. Because if you look at the last 10 years, the kind of growth which we have achieved, a broad-based growth which we have achieved, strengthened our institutions, made the economy something which the whole world is looking at. And I think we have also shown a lot of leadership quality in different forums. So I think that is something India today is quite different from what we were in the 80s and 90s. But even at that particular point of time, we have never really compromised on our sovereignty. And I think that is what I think when I say that as Indians we need to be proud, is because of the non-compromising nature which our leaders have shown even in the past, and more so even today. So I think that's what gives us lots of strength. And the fact that notwithstanding whatever happens out here, as I told you, there could be a slight dent in GDP growth, but otherwise the economy is as strong as ever.
Okay. Do you think an olive branch can be extended to the US by buying more of their crude oil?
But that's something which we're already doing. So I think because whenever we're talking of negotiation, it's not a case of us saying that everything is wrong with what America is doing. So to the extent which is possible, which does not really endanger our own interests, I think the government has already been open to it. It's just that when we're talking of certain sectors like agriculture, where I think we are cognizant of the fact that we have a large population working here, a large population which is dependent on this particular sector, I think we need to tread more slowly and more carefully, and that's exactly what the government is doing.
Okay. Mr. Sabnavis, on this fairly buoyant thoughts, let me thank you. It's been such a pleasure listening to you and your very well thought of views on the broader economy, on this tariff war, and of course what was in the past and what is most likely in the future. Thank you for your time, sir. With that, ladies and gentlemen, we'll draw this morning show to a close. The Nifty on its monthly expiry day is now below 24,700. You've seen the Bank Nifty now slip 500 points lower. So fresh selling pressure is coming into the market on the monthly expiry of F&O contracts. Remember, July has been distinctly bad for Indian equities, especially on the long side. If you subtract Pharma, it's been a very very screen to watch. The IT index in particular has slipped somewhere to the extent of about now 12-13% in July alone, and we are ending July today. Let's hope that the worst is behind us with this bad news on US tariffs, that the Indian markets have made a bottom, and from then on August will be better. I'll be back fairly shortly. Remain glued on BTTV.
Don't have President Trump tell you that I have stopped the war 29 times.
देश के इतिहास में यह पहली बार हुआ कि जंग होते होते ही रुक गई।
अगर पाकिस्तान वाकई में अपने घुटने टिकने के लिए तैयार था